Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Hello everybody, Ben Rains here with top stock picks here at Zacks. Today I'm looking at Graphic Packaging Holding Company, which trades under the ticker GPK. The basic pitch to investors is that Graphic Packaging stock offers a wonderful combination of stellar value, stable growth, dividends, and a market-topping performance over the last 15 years and over the last 12 months. And GPK stock trades under $25 per share. So now let's dive a little bit deeper. Graphic packaging is about as far from flashy as it gets. Still, its portfolio of paper packaging products are essential cogs in the economy, serving clients in industries ranging from food and beverages to food services to personal care, household products, pets, and beyond. Basically, they offer solutions for folding cartons, cooking, food service containers, cups. Really, if there's a paper-based packaging, there's probably a chance it could be made by them. The Atlanta, Georgia headquartered firm also expanded its scope into Europe through its acquisition of AR Packaging back in November of 2021. So now it's really a big player in the packaging space in both the US and Europe. The company's revenue climbed 7% in 2020, and then 9% in 2021, and then a big 32% jump in 2022, obviously boosted partly by the AR acquisition. And its adjusted earnings climbed 78% last year as well. The company topped our quarterly estimates in the fourth quarter for the sixth straight quarter in a row, and it also upped its guidance once again, even as the overall outlook for the S&P 500 earnings fades. So this steady upward revisions, along with that recent upward revisions, helps it land a Zacks rank number one strong buy at the moment. In terms of the near term, Zacks estimates are calling for GPK's revenue to climb another 5% in 2023, even after that big year last year, and help its adjusted earnings jump 18% again. So a big year again after that huge AR adjusted year last year. The company also pays a dividend that's yielding about 1.7% at the moment. And Wall Street's really high on the stock, with 10 of the 12 brokerage recommendations that Zacks has coming in at strong buys. The company is also working to expand its production efforts to support growing demand, with it investing approximately $1 billion over the next 3 years into a new mill and other efforts, which is going to be internally funded by operating cash flow. The company has also, as I mentioned at the top, outclimbed the S&P 500 over the last 15 years and over the last 10. So over the last 10 years, it's up 215% versus the S&P 500's 155% climb. This also includes a 35% jump in the last 2 years alone versus the market's 4% drop. And despite that climb, Graphic Packaging is trading 20% underneath its average Zacks price target, so plenty of upside left there. And then on top of its cheap price tag, it's trading just under $25 per share. It's also trading right near its own decade-long lows at just 8.4 times forward 12-month earnings, which represents a 60% discount to its own highs and a 45% discount against its median over the stretch. This is despite, as I said, that stock climbing over the last decade and trading near fresh highs. Graphic Packaging is also trading at a 50% discount to its own industrial product sector as well. The company obviously operates a pretty boring but essential business poised for long-term steady expansion, and GPK appears to be a great stock for the current market and economy at that uncertain time and for years to come. So that does it for me, and now I'm going to send it over to Kevin Cook.
Thanks, Ben. In this banking crisis that we're having, it's we can still find good stocks, and I love to look in healthcare, and today I'm going to talk to you about Lantheus. So here's a weekly chart of Lantheus so you can see where it's come from and where it's going. The big spike up in 2022 was on their acquisition of a technology. So Lantheus specializes in nuclear imaging. They had specialized in cardiovascular disease, but in 2022 they acquired a new technology for prostate cancer imaging. And I'll explain a little bit of that, but you can see that it greatly added to revenues and earnings, and thus the stock went from 30 to 90 almost in a year, and had a big pullback in late 22 because analysts, there was perceived competition in this prostate cancer imaging, and then there was doubt about Lantheus being able to sustain the revenue and earnings growth, and that all changed recently when they clarified and had a big beat and raise quarter, and the stock, launched back above 70. Okay, so let's take a look at what the business is. So this is the key technology. You pronounce this Pylarify, and it's a platform that combines PET imaging with PSMA, and PSMA stands for prostate-specific membrane antigen. So they're able to. This is considered the state-of-the-art for detecting prostate cancer, and you can learn more about it just by Googling Lantheus or Pylarify. So let's take a look at the sales. So number one rank. This is about a $5 billion company, just below $5 billion. So, in my book, that makes it an M&A target. I'm not saying I know anything there. It's just always a possibility, for giant pharma with their war chests of cash to come in and say, we want to own a chunk of that. So you can see this. So last year was big, double, and in some cases triple-digit growth. This year, estimates are for just over 24% revenue growth to crack 1 billion. So you can see this column up here for fiscal 23, and then even next year is already projected to grow 10%. EPS is coming in 13.5% growth, and already projected 11% growth for 2024. And just so you can see why it became a Zacks number one rank is since that last earnings report, I told you about where they just came out and beat and raised. Analysts took this year from about $3.50 to over $4.75 on the consensus, and so that that's a huge jump. And there's so that's the magnitude part of the Zacks rank. And then the agreement were that most of the covered analysts were in the camp of, we're taking estimates up based on what the company delivered. And then they even were similarly optimistic for 2024 with the bump from about 450 to over 530. So that's that's what makes Lantheus a buy here. And analyst price targets are, I believe the average analyst price target is near 110. I'm looking for at least 100 in the next 12 months. So that's why I own it for my Zacks Healthcare Innovators portfolio. Thanks for joining us this week in our top stock picks. If you like what you saw and you want to find more goodies on Zacks.com, just check out this week's promo.